What is happening, crypto champions? Get ready, because the digital asset universe is absolutely exploding with news, and you are tuned into the only place that breaks it all down with the energy you crave. The market is moving at warp speed, trends are shifting by the minute, and if you're not plugged into Bitcoin Bulletin, you're missing out on the biggest moves. Today, we've got a packed show that's going to redefine how you see your portfolio and the future of finance itself. We're diving deep into strategies that could change everything, from how governments are thinking about digital assets to how major players are positioning themselves for the next wave. First up, we're talking about a quiet revolution that's fundamentally reshaping global capital flows. This isn't just about numbers on a screen, it's about the very infrastructure of how wealth moves around the world. We'll uncover how certain digital assets are becoming the new gold standard for reserves and what that means for traditional financial systems. Then, prepare for a seismic shift in how institutions are approaching crypto. Forget the old ways. We're seeing a major evolution in strategies that unlock institutional-grade exposure. This segment is all about how innovative financial products are making it easier for big players to get in on the action, and what that means for market stability and growth. And that's not all. We're also tracking Bitcoin's incredible surge to over $109,000 and what it's sparking in the world of crypto lending. Plus, we'll break down a groundbreaking quantum-resistant strategy being pioneered by El Salvador. Stay locked in, hit that subscribe button, ring the notification bell, and let's get this episode started. A paradigm shift in global wealth, the Bitcoin Reserve Revolution. This development marks a profound transformation in how nations and major financial entities are viewing and utilizing digital assets. It's a subtle yet powerful shift, often happening behind the scenes, that could dramatically alter the landscape of global capital. We're observing a growing trend where Bitcoin is not just seen as a speculative investment, but as a fundamental component of national treasuries and corporate reserves. This isn't about a sudden, flashy announcement. It's a strategic, long-term repositioning of assets that has been building momentum. Think of it as a quiet revolution, a fundamental reevaluation of what constitutes a secure and valuable store of value in the 21st century. Countries and corporations are increasingly looking beyond traditional reserves like gold and fiat currencies, recognizing the unique properties of Bitcoin, its scarcity, its decentralization, and its growing adoption. This move towards integrating Bitcoin into treasuries signifies a maturing market and a growing confidence in its ability to preserve and grow wealth over time. It suggests a potential future where digital assets play a central role in international finance, impacting everything from currency valuations to geopolitical power dynamics. The implications are vast, touching on monetary policy, international trade, and the very definition of financial stability in an increasingly digital world. This is just the beginning of how digital assets are rewriting the rules. Next, we're diving into how institutions are getting smarter, unlocking new ways to engage with this evolving market. Ethereum ETFs triggering new waves in crypto allocation. Get ready, because the institutional adoption of cryptocurrencies is hitting a new gear, and it's being supercharged by innovative financial products. We're seeing a significant evolution in how major players are gaining exposure to the digital asset space, moving beyond direct ownership to more sophisticated, regulated avenues. The emergence and potential impact of Ethereum exchange-traded funds, ETFs, are at the forefront of this movement. These financial instruments are designed to offer institutional investors a familiar and accessible way to invest in the performance of Ethereum, without the complexities of directly managing digital assets. This development is crucial because it signals a broader acceptance and integration of cryptocurrencies into traditional investment portfolios. As these ETFs gain traction, they not only provide a regulated pathway for capital to enter the crypto market, but also contribute to increased market liquidity and stability. For institutions that have been cautious about direct crypto investment due to regulatory concerns or operational hurdles, ETFs offer a compelling solution. They democratize access, allowing pension funds, asset managers, and other large entities to diversify their holdings with digital assets in a compliant and manageable way. This influx of institutional capital can have a ripple effect, potentially driving further price appreciation, fostering greater market maturity, and encouraging the development of even more advanced financial products in the crypto ecosystem. It's a clear indicator that crypto is moving from the fringes to the mainstream of global finance, reshaping allocation strategies and opening up new avenues for wealth creation. This strategic shift is already making waves across the financial world. But what happens when a major digital asset hits new highs? We're exploring that next. Bitcoin's $109,000 surge sparks crypto lending renaissance. Bitcoin has once again captured the world's attention, soaring past the $109,000 mark in late August 2025. This monumental price action isn't just a headline. It's a powerful catalyst reigniting interest in a critical, yet often overlooked, aspect of the crypto economy: lending. As investors witness Bitcoin's impressive ascent, many are seeking ways to capitalize on the momentum without parting with their precious digital holdings. This is where crypto lending enters the spotlight, presenting itself as a sophisticated liquidity solution that allows individuals to leverage their assets for immediate financial needs while maintaining their long-term exposure to potential price appreciation. The narrative around crypto lending has been significantly reshaped in the wake of the 2022 market turmoil, which saw the collapse of several prominent lending platforms. These events, marked by liquidity crises and questionable risk management, eroded investor confidence. However, the industry has been in a period of intense rebuilding and innovation. Decentralized finance, DeFi protocols have emerged as frontrunners, emphasizing transparency through open-source code, rigorous smart contract audits, and real-time collateralization data. These platforms operate autonomously, reducing counterparty risk and offering a more trustless environment. Simultaneously, centralized exchanges are not standing still. They are actively working to restore faith by bolstering their security measures, implementing comprehensive third-party audits, and securing insurance for custodial assets. These collective efforts aim to create a more robust and reliable lending ecosystem. Adding to this renewed stability are evolving regulatory frameworks. In the United States, for instance, the SEC has been providing clearer guidelines, which has demystified operations for many platforms and encouraged institutional participation. This regulatory clarity is transforming crypto lending from a niche activity into a strategic financial tool, attractive for its yield-generating potential. Despite these advancements, the inherent risks of market volatility and potential liquidation remain critical considerations for any investor. Carefully assessing collateral ratios, platform security, and interest rate dynamics is paramount. The current market conditions, however, suggest that crypto lending is poised for significant growth, offering a dynamic way for investors to navigate bullish markets and unlock the utility of their digital assets. This new era of lending is built on lessons learned from past challenges. And speaking of pioneering, we're heading to El Salvador next for a look at future-proofing strategies. El Salvador's quantum-proof strategy: sovereign Bitcoin and multi-wallet security. In a move that looks straight out of a future-forward playbook, El Salvador is pioneering a sophisticated strategy for managing its national Bitcoin reserves, with a keen eye on long-term security and the emerging threat of quantum computing. This initiative goes beyond simple adoption. It's about building a resilient financial infrastructure that can withstand technological advancements and potential geopolitical shifts. The core of their approach involves a multi-wallet blueprint designed to diversify and secure their holdings across various platforms and protocols. This isn't just about having Bitcoin. It's about implementing best practices in digital asset management, ensuring that the nation's treasury is both accessible and protected against evolving cyber threats. A key component of this strategy is the focus on quantum resistance. As quantum computing capabilities advance, they pose a potential risk to current encryption standards, which underpin the security of digital transactions. By developing and adopting quantum-resistant measures, El Salvador is positioning itself at the cutting edge of cybersecurity for digital assets. This forward-thinking approach is crucial for any entity holding significant amounts of cryptocurrency, as it addresses a future vulnerability before it becomes an immediate crisis. Furthermore, the nation's commitment to Bitcoin adoption, coupled with these advanced security protocols, serves as a blueprint for other nations and large institutions considering similar paths. It demonstrates a serious commitment to leveraging digital assets not just for financial gain, but for strategic national security and economic sovereignty. The multi-wallet system likely incorporates various levels of security, from cold storage for long-term holding to more accessible wallets for operational liquidity, all while integrating advanced cryptographic techniques. This holistic approach to risk mitigation is essential in an environment where digital assets are becoming increasingly intertwined with global finance. It highlights a transition from viewing Bitcoin as merely an investment to understanding its potential as a foundational element of national financial infrastructure, secured against the threats of tomorrow. This ambitious plan shows how seriously nations are taking digital asset security. Now, let's wrap it all up with a quick look back at the biggest stories. And that's a wrap on another explosive episode of Bitcoin Bulletin. We saw Bitcoin treasuries quietly reshaping global capital. Ethereum ETFs are unlocking new institutional strategies. Bitcoin's surge to $109,000 is reviving crypto lending, and El Salvador is rolling out quantum-resistant plans. Don't miss out on any of these game-changing updates. Make sure you're subscribed, hit that notification bell, smash that like button, and let us know your thoughts in the comments below. Follow us on all social platforms for even more real-time insights. We'll see you in the next one.